Good evening and welcome to a brand new show of Markets Tomorrow. Just when we thought Indian markets had stabilized, things have broken once again. Nifty has registered its biggest single day fall in last 6 months. Key technical levels have got violated and individual stocks have taken a hard knock. So why exactly are Indian markets correcting, and they're correcting with some force? And is this a good time to put money to work if you're a genuine long-term investor? We'll discuss that and much more for you on this edition of Markets Tomorrow. My guest lineup for the day includes Sanjeev Prasad, Senior Executive Director and Co-Head Institutional Equities with Kotak Securities, Pankaj Pandey, Head of Research with ICICIdirect.com, and Ashwini Gujral, Fund Manager with AshwiniGujral.com. Gentlemen, good evening to all of you and thank you for joining us. Ashwini, you got the market pulse, exactly right in the morning. You had indicated to our viewers that today Indian markets will correct and they will correct with some force. And guess what? We've closed almost at the lowest point of the day. And today Nifty has registered its biggest single day drop in last 6 months.
Yes, the sell signal was visible in the morning, and generally once a market opens with a gap and does not fill up that gap, chances are that the momentum is beginning to shift. I mean, last many days there wasn't enough momentum. You had 10-20 point moves on the Nifty. Those kinds of moves don't have follow through, but this move is likely to have follow through. Plus there is global support. So chances are, if globally we are entering an intermediate downtrend, then budget or no budget, we are soon going to find ourselves closer to 5600, 5650. And the way S&P 500 has closed yesterday, that's also given a sell signal after a long time. So chances are fairly bright that we get into some kind of a downtrend. A good budget may halt the decline for a couple of days and then we restart. A bad budget will push the market further and help this decline.
Pankaj, for the day we can blame it on global cues, but in general Indian markets are looking weak, and the fact that globally also things are looking slightly shaky, do you think in the near term we could be staring at a pronounced downtrend?
Well, that will be difficult to say, but currently if you look at, we are trading at about 16 times FI13 basis. Now the problem is that probably the second half of this financial year also we will not see a growth which the market may really like. So even for the next year also probably 6.5 would be a very difficult task for the country to achieve that kind of a growth set. So given that you would expect 12-13% kind of a nominal GDP growth, or it could be lower than that, and plus the prospects of probably lower than expected cut in rates, probably it looks like that 16 times multiples would be difficult to sustain. So it is quite possible that we take a knock of few multiples and probably trade lower. So in that way, I think budget could be sort of a non-event given the kind of tight purse the firm has. So in that sense, probably I think one needs to really wait and watch for another 1 or 2 quarters, at least see in terms of numbers how the numbers could shape up for FI14. I think if the numbers look better, probably you could see markets reversing this downtrend. Otherwise, probably will have to sort of trade at lower multiples.
So Pankaj, are you making a case that it's too early to put money to work?
Absolutely.
Sanjeev Prasad,
I think it is better to wait out for events and then...
Fair point. Wait for the budget volatility, or wait for the budget event to get over, and then it's better to put money once the event risk is behind us. Sanjeev Prasad, let me also encourage you to join in here. Sanjeev, the moot point is that the budget session has started today. So to your mind, apart from a strong and a reformist budget, what exactly are markets expecting from this year's budget session?
Well, I guess it will be 2 things. One is the fisc per se, and whether the commitment which the finance minister already made to curtail fiscal deficit to 4.8% GDP, whether that will be kept or not. I assume that will be the case. And other thing which people will want to look at it is, what other reform measures the government / the finance minister can announce in the budget, which will result in growth coming back into play, because that's been a big concern. Growth is slowing down in the country. So whether it is through a combination of measures which can result in investment cycle picking up, savings rate picking up, investment picking up, all those measures as and when they get announced, those will be taken positively by the market. So it will be a combination of what you see on the fiscal side and what you see on the growth side. So somewhere the government will have to play a balancing role between, on the one side, fiscal consolidation, which is to some extent negative for growth, and second, other side is what the government can do to revive growth at the same time.
Okay, as a group today, the metal index took a knock, and took a really hard knock, down by about 3%. Tata Steel, GSPL, SAIL, just about everything from the large and the mid-cap metal space just got weeded out. Tata Steel came out with poor set of numbers. Even the valuations are looking screamingly attractive. In the near term, it's all about risk aversion. Ashwini, if your view is that in the near term we are in some kind of a pronounced downtrend, do you think metals as a group could lead the decline?
I don't think so. Yes, metals will go down, but metals never really went up. They've been going down for a long time. But I think now money will start to come out of spaces which were considered safe havens, like private sector banks and tech and pharma. All of those spaces, oil will tend to get hit, because to fall to 50 points, you can't keep beating up metals only. So chances are that more large cap stocks will fall this time than they did the last time around, when we fell from 6100 to about 5850. So metals will fall, but they will be joined in by other spaces also.
Sanjeev, yes, it was a bad day for benchmark indices, but the real pain point in the last 15 or 20 days has been the mid-cap space. So what to your mind is the root reason why mid-cap stocks have corrected? Lack of earnings visibility, rich valuations, or leverage problems?
I think it's a combination of all the three. One thing which has happened is earnings numbers, we are not seeing any great upgrades over there. In fact, if you look at the third quarter numbers, in general, the numbers were disappointing for the mid-cap space. Overall, the numbers still came out to be okay, but if you exclude the large cap names, in general, numbers were somewhat disappointing. And barring a few sectors such as, I would say, oil and gas and banking to some extent, and IT, in general, there has been a lot of disappointments across the board. So obviously, people are getting nervous based on the fact that your consumption cycle is slowing down. If you look at underlying trends in volumes, margins, profitability across sectors, very disappointing numbers this quarter. So the concern is that if the economy is slowing down, clearly it has a far bigger implication on the smaller names, which have obviously far smaller balance sheets and the resilience to tolerate a extended economic slowdown. And I think the concern is starting to build in that you could probably see maybe 18-24 months of extremely slow economic growth.
Pankaj, do you have any pre-trade budget ideas or pre-budget ideas for our viewers? Maybe for something where because of budget of 5%, 10% upside could kick in?
Nothing in particular, but I think what one can look at is probably the CV segment might benefit because of JNURM program sort of getting extended. So that could be one. Besides that, I think you could see some bit of a reduction in customs duties for set-top boxes. So that